Welcome. Subscribe to AS Foundation, India's leading academy for CA course, and hit the bell icon to get the latest updates. Thank you.
Next chapter, investment banking, a chapter which you would enjoy. It's like previous chapter only, but little different because in private equity, venture capitalist, they take a stake in the company. But investment bankers, they do not take the stake in the company. They are basically helping the enterprise in fundraising. If you want to come out with IPO, follow on public offer, if you have to acquire other company, you are a normal businessman. You don't have all this knowledge about law, regulations, procedural formalities, valuation, due diligence. So what will you do? You will appoint investment banking firms. They don't do banking business. Although their name is investment banking, but they don't have saving account, current account, FD account facility with you. They don't allow you overdraft cash credit facility. They help you in raising the funds and many other corporate advisory services they offer. Because they are well equipped. They are run by professionals. They have an expertise in this field of investment. They have a network of people who would invest in the securities. So therefore they are also a specialized entity. Why it is there in your syllabus? Because there is a huge demand for investment bankers now. Okay? Their role is very different from normal bankers. They don't give you housing loan, credit card, debit card, ATM card, okay, saving account. They help in raising of funds. They help in coming out with big IPOs. If you have to raise 10,000 crore, 50,000 crore, you can approach investment bankers. Okay? And they will do all the formalities that are required for successfully executing a public offer. Merchant bankers and investment bankers are more or less the same. In CB uses the term merchant banker. Okay. But in general they are called investment bank. It is neither investment banking nor iBanking as it is often called. Then what is investment banking? Investment banking is the business of raising capital for the companies. That is their main task. Many of my earlier batch students have joined some big investment banks like Goldman Sachs, okay, JP Morgan, Merrill Lynch. They hire CAs for your information, but he has to be really a good candidate. First time, all exams he must have passed in first attempt, preferably a merit ranker, okay. Then person who has got a good understanding of the market, who is risk taker, who is a good presenter, because you have to present a lot of stories to the other investors also. And according to your skill, they give you the role. There are various roles that also they perform. So we will see all the roles. It's a very comprehensive chapter. Only problem is it has been copied from some US booklet, and therefore many things that you will find is in US terminologies or suiting to the US environment, but we will try to understand them. Okay? So what is an investment banking? It's a business of raising capital for companies, and it's a big amount of money, not just few crore rupees. They help you to raise thousands of crores of rupees from the market. Company needs cash in order to grow and expand their business. But from where to raise money? How to raise money? What formalities you have to complete? That the companies may not know. Is it right? If they go to the bank will give them loan, but that loan is at a very high rate of interest. They don't want to raise money through loan because it has a lot of financial risk attached to it. They want to issue equity, but then don't know how to handle an equity issue. So who comes to help them? Investment bankers. Investment banks sell securities to public investors in order to raise the cash. So they know how to handle a big public issue. They've got their network, their entire machinery is in place, system is in place. These securities can be issued in the form of shares, mostly shares, but they can also help you to issue debentures and bonds. Okay. So what is an investment bank? Or who are the investment bankers? So they are usually financial intermediaries. What is financial intermediaries? They bring two people. You have lot of money. I need funds. Okay. You have lot of money, all of you. I need funds. So they will help me to raise funds. They will help you to invest money. So they are in financial intermediaries who assist their clients in raising capital, either by underwriting their shares or bonds or by acting as an agent in the issuance of securities. So sometimes they themselves act as underwriter. You have learnt underwriter. If public don't subscribe, we will subscribe. Or they act only as an agent in the issuance of securities. They will play all the necessary active roles to issue the securities to the public. Investment banking is not one specific service or function. It's a whole umbrella for a range of activities. So what do they do? When you go to the interview in an investment banking firm after you qualify, read this chapter and go. Because they will ask you, okay, you have come here. Tell me, what does an investment banking company do? So you will say they are banks, they open saving account, current account. Please move behind, there is a gate. Go out. They don't do all this basic function of a commercial bank. They are specializing in underwriting, big issues, selling and trading of securities. Okay, they do both stock and bond trading. Then they provide financial advisory services. What kind of financial advisory services? Mostly when people have to go for mergers and acquisition deals, and if it is a mega merger deal, Tata Motor has to acquire Jaguar and Land Rover. They will take the help of this investment banker. Tata Steel has to acquire Chorus. They will have to take the help of this merger. Vodafone and Idea has to merge. Now there are so many complications involved. You have to ensure Companies Act is complied with, SEBI takeover and other SEBI regulations are complied with. If any bank is involved, all banking regulations are complied with. Tax issue they have to handle. It should not happen both parties end up paying a lot of taxes in the deal. All legal regulations they have to comply, and then they advise you how to get it done. Then divestiture, which is also very common nowadays. What is divestiture? Opposite of acquisition. You acquire, but then over a period of time you have so many business verticals now. Management can't focus on all businesses. One of the challenges is time. If you don't give time to your business will not grow, not survive, you will not be able to innovate in that business. So what companies do, those activity which they find is not up to their liking or where they don't have specialization, they sell it to another company. But again, it is not a small business. It is worth thousands of crores of rupees. So you go to investment bank, They will help you to find a appropriate buyer. They will help you to negotiate the deal. They will meet all the legal compliances, and then you can sell your business to another entity. So that is called divestiture. And then private equity syndication also. Private equity we have done. In case if you want to invest in a company or acquire or invite private equity, they will help you to do the syndication. They will help you to collaborate. And then one of their major functions is IPO advisory. All formalities in IPO, you can just give them the responsibility. They will of course charge you some fees for that. But then as a management, I am not expertise in how to handle an IPO, but they will execute it on my behalf. They will ensure that all compliances have been done, money comes from the investor, it goes into your bank account, shares are allotted, shares are trading on the stock exchange. Up to that they will hold your hand. And they will also manage the assets. Some of them manage assets of large corporates or investments. They are not like usual portfolio manager. They don't have smaller clients. They don't have small clients. If you say I am an investor, I want to invest 5 lakh rupees, investment banker will not accept you as a client. But if you say I have 500 crore rupees to invest, 200 crore rupees to invest, then they will invest. Is it right? So they are handling the investment portfolio of big corporates or say big individuals, high net worth individuals. Some of the big names in the industry across the globe, very useful for you because you have chosen this as a special subject. So my duty is to tell you what are the fields available. You can simply, after you qualify in first attempt with merit or without merit, you can apply in these firms. Go to their website, Goldman Sachs, they have office in India. Bank of America, they also have office in India. Merrill Lynch, Morgan Stanley, Salomon Smith Barney. These are some, you can say, top 5, 10 investment banking companies in the world. Donaldson, Lufkin and Jenrette, Credit Suisse, they have got office in Pune also. Deutsche Bank, Citibank, Barclays Capital, JP Morgan and Barings. Earlier it was Lehman Brothers, I think they have been taken over, and like this. Lehman Brothers has been liquidated. Many of them have offices in India also, mostly in Mumbai or Bangalore. Okay. What are the verticals in a investment banking business? Like in a CA office, what are the verticals? You have one tax department, under that you have direct tax, indirect tax, international taxation, okay, NRI taxation. Then you have audit, under that you may have say stat audit, internal audit, for forensic audit, and then you may have accounting department, and there may be one advisory department for mergers, acquisition and valuation. So this is what we call verticals in a CA offices, and they specialize in each activity. Okay. Similarly, in an investment banking company, as I said, if you join, depending upon your interest and your skill set that you possess, they may either put you into corporate finance department, which you should try as a CA because a lot of action lies here, or sales, which is more for management people, because you have to convince the client again and again, buy this, buy that, sell this, sell that, which typically a CA student does not do. But they hire CA for sales also, because then you have to explain a lot of technical things there. Okay. Then trading, which is normally not for CA because you have to execute the trade, buy, sell on computer screen. Research, huge demand for our CA candidates there, for research team, because they will analyze the company and they will recommend buy or sell. And on the basis of one recommendation, the stock market can move up or down. Is it right? And then there are syndicates, that means two or more investment banking firm, they help to raise a bigger public issue. That is syndicate. So these are their departments, maybe more. Sometimes there is an accounts department also, which I have not written because all these are routine administrative department, accounts, audit, tax. So that will always be there in every company. But our topic is core investment banking function. So 5 functions we are going to discuss in the next few minutes. Pay attention, very important, very interesting, useful for you. One is called corporate finance. Many candidates who come to interview in investment banking company, they ask them this question: what is your liking? It says corporate finance. Somebody might have told him this is a good field. But then the next question is, what is corporate finance? So it is basically here they help in raising of funds and lot of corporate restructuring related issues like mergers and acquisition, divestiture, buyback of share, all this advisory comes from the corporate finance division, right? So their main functions are mergers and acquisition advisory, which will include all restructuring, and then underwriting means basically raising of funds. So what do they do in mergers and acquisition? They help in negotiating. They help in negotiating and structuring a merger between two companies. Negotiation is an art. Is it right? Negotiation is an art, which not everybody may have, especially in this kind of areas where the amount involved is very high. You may be good in negotiating in a shopping mall, okay, grocery shop. Oh bhai sahab, दूध कितने का? 40 रुपए लीटर, 35, 40, 42. But here the amount is 6,000 crore, 10,000 crore. Your small mistake can cost you few hundred to few thousand crore rupees. Is it right? That is why if you join this team, be ready for burning the midnight oil. Because the negotiation goes on and on, non-stop for 24 hours. Yes. And both parties will try to frustrate each other. Party will try to play mental games with each other. Both party will pressurize each other. Okay. And then somebody who will not be very strong, he may just give up and agree to the deals. So that is why we have to hire a specialist for negotiation purpose. Okay, who can work sleeplessly for few days in that kind of deal. And structuring a merger between two companies. Merger of two companies is not as simple as just buying some asset from a company. Buying a car and merging two companies are different. You have whole set of laws to be complied with. And if the other party is in a different country, your task is even more difficult because you have to comply with your own country's regulation, their regulation. You have to deduct TDS wherever applicable. Otherwise, you will end up paying the TDS and interest and penalty. Okay? So that is called structuring a deal. And then people are different. Practically one of the challenges which they don't write in the notes, you have to also ensure that these two companies' people now will have to merge and work together, and they have been always working in a different environment. Your query?
For negotiation, do they give jobs to CS or MBA?
For negotiation, whom do they give job? That can be both CA and MBA. It depends who can negotiate better. Is it right? Normally they keep lot of female staff for negotiation because then the males sometimes after a point of time they stop arguing with the females. Okay? But don't write that. that is not in the syllabus, that is out of record. So next is, for example, a company wants to buy another firm. What you do, go to an investment banking company, tell them this is the target firm and now you help me. So what they will do, they will finalize the purchase price by coordinating with the bidders. So negotiate with the bidder, okay. Perform due diligence. What is due diligence? This word is in your audit book also. What is due diligence? Due diligence. Before you take a final decision, you buy something, you check it. Like simple example, when you go to a shopping mall, you like a dress. So do you pay the price and take the dress and come home? No. You do due diligence. Do you know that? You will go to the trial room, check this side, that side, all mirrors. Then you sometimes also ask your friend who is waiting outside the trial room, how do I look? Yes or no? And in case if the size does not fit you, you will try again. You will go to the alteration room and then you pay the amount. For a small 500 or 1000 rupees dress, you do so much due diligence. Here we are acquiring a company. And once you acquire the company, you don't know what are the liabilities you might end up getting along with that. So there is a financial due diligence, there is a legal due diligence, okay, technical due diligence, and so many due diligence are involved. Okay, so that after you acquire, you should not be burdened with unnecessary liabilities, and whatever asset that they are showing in the balance sheet, they are actually existing and they are worth the amount they are appearing in the balance sheet. That is due diligence. It takes a lot of time. Both parties do due diligence of each other, the buyer and the seller. Usually the seller is of course going to do the due diligence of the buyer. It is like an audit procedure but more detailed, more comprehensive, because now you are going to pay a check to the other party once the due diligence is done. And once the other party receives the checks, goes back to his home, it is your duty now. They help in structuring the deal. All terms and conditions they will write in fine prints, so that later on if some dispute arises, you have an agreement to show. So they are armed with some top-notch lawyers. Okay. So there are specialist lawyers who help them in this field and they outsource their services. Whenever they require this big lawyers, they will come, they will draft the deal and negotiating with the merger target, that means other company, and generally ensuring a smooth transition. That is the role. And they get a lot of fees for this mergers and acquisition also. So if they crack a deal of say 1000 crore rupees, maybe they will earn something around 100 crore rupees as a fees from that deal. 50 crore to 100 crore rupees they get as fees. And those employees who work in that project, about 10 to 15 employees work, they get a bonus equal to their salary for the entire year. Sometimes 2 times of the salary. So if your salary is 10 lakh rupees, bonus is 20 lakh. If you crack some major deal, okay. Yes, I am not telling you just like nothing. It is happening. So mergers and acquisition advice include buy side and sell side advice. This is also very interesting. Buy side and sell side advice means sometimes the client says, I want to acquire this company. You help us with that. Some clients come and say, I want to sell this company, sell this division, sell this business, and you help us to find a buyer. So they do both the work. To the buyer, they help them in identifying a seller. To the seller, they help in identifying the buyer. And then it involves a lot of, again, back office exercise. So competent buy side analyst and sell side analysts are appointed by the investment banking companies. So it means these are their staff only, analysts. Normally in their company they call the employees as analyst. Okay. Buy side analyst means he is specializing in acquiring. Sales side specialist is specializing in sales. So even that level of specialization is done. In mergers and acquisition also they may have two teams, one for buyer, one for seller, because your negotiation skill is different. When you are buying, you will try to reduce the price as much as you can. When you are selling, you will try to inflate the price. Okay. So this is again a different skill. Are appointed by the investment banking companies to advise their client on lucrative merger targets in case if a firm wants to buy another firm, and potential purchasing company if it wants to sell its assets. So they help in buying and selling both. The traditional investment banking world is considered the sales side of the securities industries. Normally investment bankers are sales side, because mostly they would like to sell the securities, raise money, but that is not always the case. So I have written one question on the screen: why investment banks are considered the sales side of the security industry? Because mostly they sell the securities like bonds, shares, IPO, FPO, right shares. So traditionally they are called sales side, but of course they also do buying activity. Investment banks create stocks and bonds and sell this to investors. Sell is the key word, as the investment banks continuously sell their firm's capabilities to generate corporate finance business. Mostly they have specialization in raising of finance for their clients, which means ultimately what they are doing, they are selling the securities to the investor to raise the funds, and hence they are called sales side companies. Who are the buyers of public stocks and bonds? To whom do they sell? They sell to anybody who has money in his pocket. So generally the investors would be individual investor, you, me, and institutional investor. The big shots, like in this example they have written Fidelity, Vanguard, name of the companies in USA, but it can be mutual funds in India, insurance companies, banks, corporates, okay, NBFCs. Now we'll discuss something about underwriting, but I will do it little fast because you have heard this word underwriting before also. When a corporation wishes to issue new securities and sell them to the public, now there is a risk involved here. Public may not subscribe. So it makes an arrangement with an investment banker whereby the investment banker agrees to purchase the entire issue at a set price known as underwriting. Again, the agreement may vary from company to company, underwriter to underwriter, or investment banker to investment banker. Sometimes they say, you don't worry, you sell everything to us and now we are going to sell it. So it's like first wholesale, then retail. And in India, usually it is like first we will try to raise as much as we can from the public in general, and in case if they don't subscribe, we will subscribe. Underwriting can be done through negotiation between the underwriter and the issuing company. So that is called negotiated underwriting, or underwriting can be through competitive bidding. What is a negotiated underwriting? A negotiated, as the word suggests, is a negotiated agreed arrangement between the issuing firm and its investment banker. So they will agree on certain things, that if public don't subscribe, you subscribe, or you will get a firm underwriting of some percentage, or you take the whole issue, give me the amount, and then you do the retailing. That is negotiated. Most large corporations work with the investment bankers with whom they have long-term relationship. So it is generally negotiated underwriting. Terms and conditions are agreed, but sometimes there can be competitive bidding underwriting also. In that case, the firm will award offering to that investment banker who will offer the bid for the highest price. The one who pays more will get the stake, will get the shares. So first we have covered one major function of investment banking companies, corporate finance, mergers and acquisition, IPO, underwriting, okay, negotiation, structuring the deal, etc. That is what you do in the corporate finance division. Then the second vertical or the division in investment banking companies are sales department. Now this sale is different from your normal selling because you have to convince the client about investing in the securities. So whenever the IPO has to come, they will call all their clients across the country, individuals, corporates, high net worth individual, institutions, give them information about that IPO, convince them. Is it right? Nowadays they start sending all WhatsApp messages also. Do you get it? No. On WhatsApp many times they will come, this issue is coming up, these are the features, okay. Maybe you are right now students, so they are not sending it to you. Then SMS they will send, email they will send, okay. So basically the idea is to help the companies to raise the funds. So sales are another core component of any investment bank. MBAs are usually hired for this activity because they have a more negotiation skill or convincing skill. CAs are good with all number crunching, technique, yes, concept. Primary job of sale function is to call on high net worth individual and institutions. So he'll make a call anytime and suggest trading ideas. Suggest trading ideas. He will say, oh, this stock is coming up. I receive call. Okay, this IPO is coming, sir, please invest. Huh? Patanjali IPO, when it is coming? Okay, please let me know whenever you get to know about it, okay? On a caveat emptor basis means you be aware. But many of them give wrong ideas also, just because they will get the commission. Don't write that. And after you have convinced your individual clients and institutions, you take orders from them and accordingly you buy and sell. But they actually buy or sell in huge quantities. As I have told you, they don't deal with retail people except high net worth individuals. So sales people take the form of classic retail broker, institutional salesperson, private client service representative. So who is a retail broker? Develop relationship with individual investors. These retail brokers, there may be a small department for retail brokers also. And then he will deal with individuals, give them stock advice and take orders from them. But mostly they have this type of salespeople, institutional salespeople. Mostly they are having this type of sales. So if you join a investment banking in the sales department, they'll put you into this team, institutional sales. That means you have to go to big companies, meet their treasury manager, CFO, tell them that this is a new issue, debt and bond, and convince them to purchase. So develop business relationship with large institutional investors. Who are institutional investors? Are those who manage large group of assets, for example, pension fund and mutual funds. Okay. So the sales people of this investment banking meet the fund managers of mutual fund, pension fund, insurance company, corporates, banks, and then they will try to sell their ideas and make them buy. And then there is something called private client service, PCS representative. It is somewhere between retail broker and institutional salespeople, providing brokerage and money management service for extremely wealthy individuals. No, it is a department in investment banking only. Suppose Narayan Murthy is there. He has got wealth of thousands of crore. So in that case, he may be taken as their client. Okay. So generally the ticket size is very big here. If you want to become the client of a investment banking company, they will help you. But then maybe say you should have a fund of 100 crore or something. You can. I can also. I am already there, don't worry. Just joke. Now, how do salespeople make money? As usual, they get commission on the trade which is executed. So once they receive the order, they will pass on the order to the trading department. And then the trading department will execute those trades, buy or sell. Okay. So sales people communicate the client's order to the trading people. Salesperson job is only to bring the customer. And when the customer says yes, you can buy 5,000 shares of this company, then it will be transferred to trading desk. And this trading desk people, they will actually complete the deal. So what do traders facilitate? Traders facilitate buying and selling of stocks and bond. Tick mark. Traders facilitate buying and selling of other securities such as currencies, either by carrying an inventory of security for sale, which means in case if the investment banking is having already inventory of shares, from that they will sell. That is proprietary trading. From their own account they are trading, or normally this is what they do by executing a given trade for a client. Just like brokers do, but here the ticket size is very, very big. I have seen thousands of crores of rupees transaction they do. Then what is the benefit of the trader? Traders helps in making a market. What is making a market? That means they generate demand and supply. Making a market in finance means generating demand and supply for securities. So traders deal with transactions, large and small, and provide liquidity for the market. How do they provide liquidity to the market? By their ability to buy and sell the securities. They have got many clients. Many of them want to buy, many of them want to sell. So therefore they are able to provide liquidity to their client. They will match the buyer and the seller, and this is often called making a market. One more question they have repeated. How do traders make money? Earlier was how do sales people make money? So trader make money by purchasing securities and selling them at a slightly higher price. In many investment banking companies, the traders are given power. What is that power? You keep an eye on the market price. You can buy at a lower price and sell it at a higher price. And the difference between the two, called bid-ask spread, is their profit. So there is a trading desk also, where the person is allowed to buy and sell, and they make a lot of profit there. In terms of millions and billions of rupees they profit make. But again, you have to be very good with that. If you make losses, then next day your computer screen will be locked and your password will not work, which means fired. Okay. So in USA, what they do, if they have to fire somebody, simply change his password, and if your password is changed next day, it means you are fired. Go home. So that is a polite way of saying that you are not required now, instead of telling on your face. Okay. They are not given access in the office only many times. Yes, some or the other way they do politely, so that the person also knows that he is now no longer required. So therefore it is a very risky job also, investment banking business, especially if you are on the trading counter, where you are not allowed to make mistakes which will cause loss to the companies. One of the reasons of 2008 financial crisis is greed of these traders. If you read the book, which book I have recommended to you? Too large to fail. Yes, too large to fail. Story of Lehman Brothers collapsing, because their traders have taken very wrong positions, and as a result they lost. Trader, what he will do? He will lose the job. Ultimately, who will have to pay the bill? The investment banking company will have to pay the bill. They can fire you, they can stop your PF payment, gratuity payment, but compared to the loss that you have suffered, this is nothing. The losses goes into hundreds of crores of rupees. Now, proprietary trading means, as you know, purchasing and selling by the investment banking on its own account rather than on the account of client. Proprietary trading. Sales and trading can also engage in proprietary trading. Proprietary trading involves a special group of traders who do not work with the clients. So they are buying and selling for the investment banking company. And then these people have to really make profit for their principal. This trader take on principal risk. So it is not the client's risk now. It is the principal risk. In case if there is a loss, the investment banking company will have to suffer, which involves buying or selling a product and does not hedge its total exposure. So you are buying and selling on your own account. By managing the amount of risk on its balance sheet, an investment bank can maximize its profitability. Now, next paragraph is interaction between departments. Sir, what is interaction between departments? Do all these departments act completely independently? Complete independence is not possible, because as we have seen that once the sales department receives the order, he has to pass on to the trading department. Similarly, if the corporate finance department has to raise funds, it will inform salespeople, and then they will interact with the high net worth individual, institutional client, inform them about an IPO, FPO, right issue, bond issue, and convince them to purchase the shares. So in investment bank, sales and trading department also interacts with the corporate finance department on the issuance of IPOs and follow-on offerings. It is the sales and trading department that builds a book for a particular stock by calling up institutional and retail investor to judge the interest for the offering. Understood? IPO is coming. Corporate finance department wants to bring out an IPO. So they will then call their salespeople. See, you have to inform your known clients, and then you will start receiving the phone calls. Sir, this IPO is coming. Would you like to invest? Okay, etc., etc. And then they get to know what is the interest of the investors. Accordingly, they many times set the prices also. So then they price the initial sales value on the day of the offering and begin selling the new shares to their clients. One of the important departments in investment banking companies are research department. Okay. Now they themselves is a non-revenue generating department. They do not generate revenue. Then what do? They do the research on companies. They do the research on the bonds and equity issues. And then they prepare a report, which is called research report, equity research report. This is popularly called in many offices as equity research. But it is not always equity. They also do research on, say, bonds also. But mostly equity, because there you have a lot of things that you have to understand. Okay. Then what do? They prepare a report. They prepare a report. And in that report, they will write whether the stock should be bought, sold, or it should be held. Okay, the front page, the first page of that report normally gives you in bold letters clearly indicating buy or sell or hold, which means in the opinion of this research analyst, the stock price will go up in future, so buy, or the stock prices will fall in future, so sell. So their recommendation, if it is a good research house, if it is a reputed research analyst, it makes an impact. The moment that research report goes in the market and if he says buy, share prices go up. Or if he says sell, share prices can fall. Some of the reputed research analysts, they are my friends now, they receive call from Anil Ambani sometimes. One day he told me, I said, what happened? He said, Anil Ambani had called me. I said, why? He said, I have got to know that you are going to put a sale on my stock tomorrow. Please don't do that. Sometimes they get call from all CFOs in case they get to know that this analyst is going to put a sale on his company, stock price will crash and you are a reputed analyst, okay? It happens. What did my friend do? He cut the phone. He said wrong number. What did Anil Bhai did? I don't know. We cannot do anything. He cannot go and shoot him. In the next meeting, they will not allow him to attend. That is what they do. Because whenever they have the investors meet, if they find some analyst is not according to their liking, he might not get the invitation. That is what they can do. That was just a story I have told you. But this is what happens in reality. If you are a very reputed research analyst, your one recommendation can put an impact on the share price next day. Review companies. Next function, review companies and write reports on their prospectus, often with buy or sell ratings. So point number 2 and 3 are similar. Stock analysts are called equity analysts. Typically focus on one industry and will cover up to 20 company stock at given time. So normally what these iBanking companies do, they give one analyst normally only one industry to handle. Is it right? So a friend of mine right now is covering only banking companies. I met him yesterday only in JW Marriott. So I was asking which industry you are handling. He said only banking. I said only banking. He said it's not only banking. It is banking. So many things are there in banking companies. And along with banking, now he said I also look after NBFCs because they are also like little related. Okay. And in India you have SBI as listed company, ICICI, SDFC, Yes Bank, Bank of Baroda, Kotak Mahindra, Axis Bank, whatever, XYZ. You have to track all these companies. Is it right? And then you have to recommend which company to buy or sell. Any economic news, political news, which might affect the price of a banking company, they have to track. They have to make projections of next 5 years, 10 years. Okay. How so many events can influence the share price, all this they consider and then they write in their report. Okay. So that is your equity analyst. One friend of mine is only handling Japanese telecom companies. Which companies? Only Japanese telecom companies. Or Japanese, I think, plus China also now. So he has been specializing in telecom companies of Japan, China and Hong Kong, etc. Yes. So they have to specialize so much because they have to understand the whole business model. Why do they give you free voice calling, etc.? How do they make money? What will be the future if the competition goes to this level that they don't charge you anything except for the data? So they have to make money. So they do all the analysis and then they come out with some report. So it's really interesting. And those who are handling this Japanese and Chinese company, they also have to learn a little bit of Japanese and Chinese also. Of course, they are supported by an interpreter. Whenever they go to Japan, one assistant called interpreter also comes to airport and then he goes to the analyst meet, he keeps translating wherever required, etc. So task is tough, you decide. Some research analysts work on the fixed income side. They are little lazy people. Fixed income means debt, bond, debenture. It is not as exciting as equity, of course. Of course, this is also a big business because in this bond and treasury bond, the ticket size is really very big. Maybe 1,000 crore rupees in one transaction, 10,000 crore rupees in one transaction. So they have to also keep understanding. So that is why in your syllabus that bond valuation chapter is there. They have to understand what is duration, modified duration, interest immunization, all those concepts, convexity. They have to know in and out and how a particular decision will affect this variable and the valuation they have to understand. So if you talk to such people, they will tell you that they apply such concepts. Have a separate research department. So the benefit of research team is that research department on its own may not generate income. So for you, that CA, it looks like these are only cost centers. These are only cost center. They don't sell. They don't generate brokerage commission for the organization. They don't generate capital gain for the organization. But trust me, they influence the trading volume. Based on their reports, their recommendation, sales takes place. Buy and sales takes place. And there the organization makes profit because of buying and selling. This I have already underlined in your book. When a research analyst changes his or her recommendation on a stock, earlier it was suppose buy, but then this analyst finds that no, we think it should be sell now. The moment he changes from his buy to sell recommendation, next day what will happen? Investor will act on that recommendation, and that the sales and trading teams earns more in the trading fees. But of course, he has to be impartial in his recommendation. Integrity is a very important issue here. So even if Anil Ambani calls you and says you don't change my rating from buy to sell, you should have the guts to say sorry, wrong number. Okay. Huh? What he will get? How did he get to know? Not because there are so many people in the organization and somebody may oversee what you are doing on your computer screen. That is why they are usually given a separate cubicle or a cabin so that they can work seriously and with secrecy. But that is something which is very difficult to maintain in India. Okay. There are so many other employees who might have leaked that information. But it should not happen. Research team should work in seclusion from other departments. Because if other departments get to know about what they are going to do, they might influence their clients. Sales people within iBank utilize research published by analysts to convince their clients to buy or sell securities through their firms. On the internet, many research reports are available nowadays. You should at least see the format, see what they are writing. and you will really understand how much effort they put in preparing one report. You will say, oh, this is near impossible task. So much data, so much information they collect about companies, and then they convert that into a number that is the expected price in the market 1 year down the line. Is it right? So it's a really tough job if you are reading a good report. Next is corporate finance bankers rely on research analysts to be experts in the industry in which they are working. Reputable research analyst, I have told you, reputed research analyst can generate substantial corporate finance business as well as substantial trading activity. So my question was, why research team is required in iBanking companies? Because a good research report can bring a lot of business for the organization. One question this gentleman has raised: how did Anil Ambani get to know that the analyst is going to put a sell recommendation tomorrow on the screen? Conflict of interest between research and other parts on the investment bank. So there is a conflict of interest. Sometimes the research team are forced, which you should not write in the exam. They are forced by their bosses or by some top-notch industrialist, okay, that you recommend in a particular manner. You recommend in a particular manner. That means you put a buy on our stock. The analyst from his heart, he knows, no, this share is not worth buying. I want to put a sell, but then sometimes he has to compromise. Vice versa also. He wants to put a buy notice, somebody is selling sell. The bosses, as you know in your offices also, you want to qualify the report. Bosses says, okay, let it be. It is just 1 day delay in depositing the PF in the bank account. How does it matter? But your Caro says, even if it is 1 day delay, the report needs to be qualified. Is it right? So there is a conflict of interest because traders want to sell. Traders want to help some of their clients. Even there are proprietary trading we have seen. So if you are already doing proprietary trading and you are using research report in the market, it's a conflict of interest. Because if you have taken a huge long position on the stock in your proprietary account, what will be the research team doing now? It is going to put a buy recommendation on that stock so that the market price rise. Even though it may not be a buy, it may be a sell stock. Okay. So if an investment bank were about to issue new share, they see one more thing. Whenever the corporate finance department wants to issue share, suppose they are going to come out with a follow-on public offer on X Limited. Immediately what the research team will do, they will write a buy recommendation so that the corporate finance department is able to successfully execute that IPO or FPO. Is it not clashing of interest? Yes. Then proprietary trading. Proprietary trading division wants to boost the return on their holding. They have purchased a lot of share in some company. What research analyst will do? He will put a buy recommendation, or is forced to put a buy recommendation. Those who are very honest, those who have integrity, they even leave the organization. But nowadays, honesty, integrity is found only in planet Neptune and Pluto. Okay. What is law syllabus? In IPCC, what is law syllabus? Ethics and communication. Okay. When ethics, communication and law was introduced in CS syllabus, I had written to our board of studies, how can law and ethics be in the same syllabus? What a paradox. No reply. Do you get reply from them for such? Huh? How can you put law? When I was in board of studies, I had asked them, how can you put law and ethics in the same syllabus? Student will get confused. Either it should be law or it should be ethics. So they just laughed at me. He said, okay. Now let us come to next point. There are a number of areas where the research department could be used to mislead investor and earn more profit for the investment bank. So that is one drawback of investment banking. They might misuse the research department for their own benefit. So therefore, we must create a Chinese wall between research team and other departments. That means other departments should not know what research team is going to recommend. Research department should not know what other teams are doing. But is it possible? Is it possible to create a Chinese wall between the other departments and the research department? In your offices, you will invariably know what other departments are doing. Is it right? So therefore it's little difficult. Many of them, practically I have seen, they keep 2 floors. One floor for research team, where the traders and sellers and corporate finance division may not be allowed to come, and vice versa. Research team will not be allowed to go into that sales, trading or corporate finance team. But of course they will meet during lunch hours, outside the office, okay, for having tea or coffee, and then discussion do take place. To circumvent this conflict of interest, regulators have insisted that, in USA they are very tough, that banks should implement a Chinese wall in their firms. As you know, China wall, the Great Wall of China. Okay, this is just a concept of Chinese wall. They don't have to actually physically build a wall there. It means the information should be separated. Okay, the Chinese wall keeps information about investment banks' corporate sales and trading activity from passing through to the research department. A Chinese wall also exists between the corporate finance and sales and trading divisions, because many corporate finance activities involve non-public information that could be used to profitably execute trading strategies. So what they are saying is, you must create a Chinese wall between corporate finance department also and sales and trading department also. Why? Because corporate finance department has some information which might influence the sales. Example, you are a corporate finance personnel, okay? You are working on a mergers and acquisition deal. So you might have the information that this deal will crack. This information you have because you are working on that project. But if this information is passed on to the salespeople, he will go to his client. See, I have got to know X is acquiring Y. Y share price is going to rise very soon. Okay. So why don't you buy 5 lakh shares? I'm sure that will make huge amount of profit. So they don't have to pass on the information to the sales team also. Ideally, ethically, there should be a Chinese wall in different departments in iBanking. Okay, because it may influence the sales and trading activities. Anyway, so at least you are now getting the feeling of investment banking. How do they work inside the investment banking companies? Okay. Next is syndicate. Whenever this word syndicate comes, it means 2 or more entities, 2 or more persons, 2 or more institutions. They come together with some common objective. So that is syndicate. So for large or risky issues, a company wants to raise 40,000 crore rupees, 50,000 crore rupees. Now this is a serious money, huge amount of money. 50,000 crore rupees in India is still a big amount. Maybe not in USA, but in India it's still a big amount. And therefore, one investment banker may not be able to handle such large issue. 2 or more of them will group together as a syndicate. It's like a reinsurance, you can say, but not exactly. They work together. They work together. A syndicate is like a joint audit, which you have heard in your audit subject. If you have to audit a company like Reliance Industries, all your 100 staff will not be sufficient to do that audit also. So what they do, they have given this audit to 2-3 firms, so that this big audit can be executed properly. Same thing here for some large IPOs. Nowadays mostly there are more than one investment banking involved, because huge size these IPOs in India are now getting bigger and bigger. At least they go into terms of 10 to 15,000 crore rupees on an average. That is on an average. Sometimes it is more. So therefore they come together. It's a temporary association of investment banker only for that project. And once the securities are issued, each of them get their piece of cake, that is profit, commission. Again, they will work separately. Syndicate provides a vital link between sales people and corporate finance. Syndicate exists to facilitate the placing of security in a public offering, because they have got their own channels, own network. Somebody may be good in South India, somebody may be good in North India, somebody may be good in Eastern India, Western India. So this way, if they come together, they are able to raise money from the entire country. They have their own set of clients, yes or no? So syndicate exists to facilitate the placing of security in a public offering. In a corporate or a municipal debt deal, corporate or municipal debt means bonds, syndicate also determines the allocation of bonds. So that is what they do. Now in syndicate, one person will be made the boss. One person will be made the boss, lead manager. So he will do most of the administrative task, and then others will follow. So in one investment banker is selected to manage the syndicate, who will be called originating house, underline. Because in the exam the question will be, the investment banker who manages the syndicate is known as dash, and then you have to fill in the blanks, originating house, which does not, or lead manager they are also called, which does underwriting of the major amount of the issue. So normally in a syndicate, most of the syndicates, there is one person who will be the main boss and others will work with him. There are two types of syndicate, divided and undivided. Again question for you, divided syndicate means dash. Dash means this. Then you have to fill in the blanks, divided syndicate or undivided syndicate. So divided, how do they operate? Each member group has a liability of selling a portion of offering assigned to him. You will remember that underwriting chapter, A, B, C, D are investment banking. They will be given a target of 2 crore share, 3 crore share, 5 crore shares, 10 crore shares. So they have to bring the respective shares. Whatever is the shortfall, you buy. This is called divided. Undivided means, first suppose we have to issue 10 crore shares. We could only raise 8 crore. Balance is 2 crore. Who brings how much is not important. Remaining 2 crore, which is not subscribed, will be distributed according to their original commitment in that ratio. So each member group is liable for unsold security. This is unsold security up to the amount of its percentage participation. So all of them have suppose committed 25% each. Then each of them will have to bring or buy 25% of 2 crore unsold security, irrespective of the number of security that group has sold. So now here we are not treating 4 as separate. Total issue 10 crore, total subscription received 8 crore, irrespective of who has brought that subscription. Unsold to divide as per the ratio they have agreed in the beginning. Okay, so that is syndicate. The breakdown of these fundamental areas differs slightly from firm to firm. But typically an investment bank will have these areas. Now this is like, in general, what we discussed in general was about how an investment banking firm work, but not every investment banking firm will work exactly the way we have explained it to you. Understood? Some investment banking companies may not have research team also, so that secrecy is maintained. They will outsource it also, or they will make it a separate subsidiary company also, which will only be involved in research activity. That is also possible. Okay. So that is, we have completed the 5 divisions in a investment banking. First one was corporate finance. Second one was sales. Third one was trading. Fourth was research. And the last one is the syndicate. Okay. So you can choose your interest and you can tell them. In fact, in their interview, they give you one form also sometimes, remember, if you go there. And in the form they will ask you which department you want. Many students, they have come to me, sir, they are asking which department. I don't know what these departments do. So now you have got the idea. Corporate finance, raising of funds, merger and dealing, arranging for deal. Sales side is basically they sell the products, and trading, which normally they don't give to CA the trading task. It's more clerical efforts involved there. People with normal MBA degree from Pune University can also do the trading. And then research is, yes, really their CAs are required. And this last one is syndicate. Now the next topic is commercial banking versus investment banking. This we will continue tomorrow.